3M stock is down 15% year to date in 2023, which has a lot of people talking about it, asking if it's a bargain, if the stock price decline is justified, are the legal issues behind it, how much is it going to cost? So there's a lot going on around 3M stock. So in this video, I'm going to provide some deeper insights. It's not just the legal issues that's causing 3M stock to be down 15%. Of course, the legal issues are significant. 3M could be held liable for billions of dollars in expenses, but that's not the only thing challenging 3M right now. So in this video, I'm going to set aside the legal issues and I'm going to look at the actual fundamental business issues that's holding back 3M stock that could potentially be leading to this stock price decline. So, in its most recent quarter, revenue fell 9.7%, and that was due to several headwinds facing 3M. Number one, the headwind of approximately 300 million or 3.4% of that 9.7 was related to disposable respirator demand that was significantly higher during the earlier stages of the pandemic and the exit of their operations in Russia last year in the third quarter. So excluding that, in the first quarter, organic sales growth was minus 2.2%. So a big bulk of that was due to those headwinds mentioned there. But the lower sales volume combined with their efforts to reduce inventories resulted in lower manufacturing productivity versus last year's first quarter. 3M was able to partially offset those headwinds through pricing performance, in other words, raising prices, and aggressive cost management, in other words, cost cuts, job cuts, and that resulted in a net headwind on margins of 90 basis points. So the operating margin was 17.9%. That was down by 90 basis points year over year. So 3M faced a challenging first quarter compared to last year's first quarter, where it saw significantly higher demand due to the Omicron variant, which drove demand for disposable respirators, right? This year didn't have that impact. So the carryover impact also from higher raw material costs, logistics, energy cost inflation created a year-over-year headwind of approximately $100 million or a negative 130 basis point impact to operating margins. So what you're noticing here is 3M is facing more issues than just the legal issues, right? The company benefited from the changing consumer behavior during the pandemic, which created a surge in demand for some of its products, notably disposable respirators, but also other goods that people were buying. 3M benefited from that, right? The more manufactured goods people buy, the more it benefits 3M because it has its hand in several industries. It's an industrial giant. But now that people are spending more money on services like restaurants, concerts, theme parks, ball games, those types of things don't directly benefit 3M as strongly as when people buy manufactured goods, things like electronics, TVs, computers, things that we consume at home. That was benefiting 3M much more than spending money at restaurants, theme parks, concerts, and the like. So despite all of those headwinds, 3M was able to increase adjusted free cash flow by 24% year over year. The improvement was driven by lower annual incentive cash compensation and a strong focus on working capital management. In other words, they lowered inventories, right? And when you lower inventory investment, that improves your cash flow because you're not spending the cash on inventory. That makes sense. And the company was able to anticipate this slowdown in consumer demand or this shift in consumer demand, and it was able to manage effectively. So kudos to management for dealing with this difficult situation effectively. It was dealt a bad hand, but it dealt with it effectively. So since last August, the company has driven $500 million of reduction in inventory levels. So in other words, 3M is facing was facing significant headwinds. The company did manage these headwinds well, and these headwinds are outside of the legal issues. Now, we didn't even talk about the legal issues that the company is facing. So, yeah, I mean, the stock price falling by 15%, it's justified considering the headwinds that the company faced. And it's also reasonable to be attracted to 3M stock because a lot of these headwinds that was mentioned here are temporary in nature, right? Consumers are eventually going to complete or get through that pent up demand for away from home experiences, right? Right now, people are spending more than usual at restaurants, at on travel, on concerts and theme parks. That's not where it's going to be longer term. Longer term, it'll revert back to a normal separation of spending between goods and services, which the pandemic distorted significantly one way and the other. It'll settle down into equilibrium, probably not this year, maybe not even in 2024, but probably starting in 2025, consumer spending will revert back to an equilibrium level. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.